flash update for this Monday, the 17th of August, 2020, and the time about 9:30 a.m. Central Time. There you go. Up and away we go again. And what's leading today? Basically the NASDAQ. So here's what goes on. You get the other three indices coming up, the NASDAQ able to slip back. Then when they sort of flatten out against the old highs, especially in the S&P, the NASDAQ comes racing up again. So what happens here? Each one's pulling on the other, and that's classic bull market action. No way you can get around that. Dollar under assault again today. Look at the currency market. Explode, not currency, the gold. I call that exploding to the upside. Look at silver up another $1.50. Now from the low to the high, look at the size of that rally. I mean, that is an impressive rally. This market just doesn't back off very much. The copper doing what I wanted. I was questioning last week, why was this market down? And it's come back to life. So that tells me that everything looks good in industry still. Let's take a look over here at the grain markets. Even with the call-off of the meeting between the U.S. and China, the virtual meeting that was to take place this weekend on the phase one part of the U.S. trade deal, the market is accepting, I think, the fact that the deal is going forward. Why it was called off is beyond me. I know that China has not met its obligations, and the way that the U.S. keeps slapping against them, maybe it was just a matter they didn't want things to get out of hand. I don't know. When you look at bonds and notes, coming back. Now, they had hit their Bollinger Band bottoms, and they're getting a rally. Remember, in the energy markets, OPEC meets tomorrow, and the question is, are they going to put forward more production, not cuts, more production, or are they going to lean off of that and let the market more balance itself out? I don't know. What I do know is the New York Fed Empire number came in, and an expectation of 15, well, that didn't happen. Way down to 3.7. But instead of the market embracing that as bearish, what the markets decided, it looked at the prior jump of 17, one of the biggest on record, and said, you know, the market's not able to sustain that. It's getting back to a more normal sense, and it accepted that as a bullish number. Surprising to me, yes. The market decided employment index looked good. New orders index was down. I don't think that's so friendly. But the prices were able to go up everywhere. And the shipment number, way off from before. We expected that. Remember, you get back to normal, everything explodes as you do that. Now I think what the market's saying, we're getting into whatever the new norm is. The NAHB U.S. August Housing Market Index came in at 78. The market expected 73. That's big. The sub-index of current sales rose 6 points to 84. When you look at these indices and you realize that that's an all-time high in that number, and you go back just a few months ago to the biggest plunge the index ever had, you realize housing is back and back in a big way. Friday's Baker Hughes data came in with rig counts continuing to fall, and as I pointed out to you, we keep seeing the permit numbers for new rigs slipping away. These people aren't looking to do anything. Chaparral went into bankruptcy for the second time now in a short period of time. The Democrats today, they kick off their 4-day virtual convention. That should be an interesting ordeal. Next week's the RNC. And for the first time in 20 years, California's back to enacting blackouts to conserve energy. I don't know if you're aware of it, but in parts of California, they're now hitting 112 degrees. I'm talking the LA areas and others that are getting very hot. The rolling blackouts are going to be a norm if the weather stays like that. And it's not just California. The whole west area, from Nevada down, if you look at that dome that's over the market, it just sit there. That's pretty dangerous for the marketplace. So let's talk a moment, if we could, about what I do. You know, this weekend, if you didn't attend, we had a great webinar, a lot of questions. The most questions of any webinar I've ever held, 73 of them. And I was able to answer them. The webinar, by the way, is on the website now. So if you go under our website and you go to, I believe it's going to be research, you'll see the webinar, click on it, you'll be able to view it there. 40 charts, that's what I cover each morning, 40 of them. At about 5:40 in the morning each morning, I start recording my analysis. I'm going to give you points of exact entry, exit, where I want you to look for the market to go. And obviously, the one thing there, it's got to be just besides exit profit objectives or exiting, stop orders. I will be wrong. It's a guarantee. Nobody walks on water. The question is, can you control the risk when you're wrong to let the other parts make that up? I'm going to cover all of these indices in this exact order each and every time. And on our website, you'll see a scroll bar. Just click on the bottom of the bar. You'll be able to get right to the area you want without watching other areas, or you can watch the whole thing. How much is it? $7.95 for 30 days. How do you get it? You go to our website under the word research. By the way, the webinar was 1 hour long, so if you think it's not full of information, you'd be very wrong. And the price of the webinar is included in each subscription. I'm Ira. You have a great day. That's www.iraepstein.com. Research. Take care.